24th January 2023, Tuesday. Alright, today is already True Sun, right? Alright, Charlie Munger and Michael Burry, right? We know that they are not really in acquaintance, but apparently they are on the same page right now, and it's all about inflation. So today is all about inflation. I'll share you more in greater details. But once again, make sure your risk assessment has been done, and thank you, AIMS, for the kind sponsorship. Now let's recap what happened on last night. Sorry about that. Alright, the Nasdaq is up by 2%. Wow, amazing. Yeah, seriously, it's amazing on that. So what happened is that we can see Microsoft up by 1%, Google 1%, Apple 2.35%, and incredible, Tesla up by 7.74%. Oh my God. I mean, I know that Tesla is pretty impressive recently because of the knockdown prices, but then I just can't see why there is a big hoo-ha on this, because you must understand, if they knock down prices, they may get a better order, more orders, but the thing is that the earnings is still going to be reduced. So if you ask me, right, maybe you can try to buy some Tesla at $100 to sell at $140 right now, but you don't really consider to like buy here for long term. So Tesla share is back to $143. I think, in my opinion, it's a very good price to take some profit. Alright, so let's see what actually happened. So share of Tesla and Apple gained on hopes that a reopening in China will boost their businesses. Alright, so we all know that both Tesla and Apple share came down recently because of China COVID situation. So if COVID is going to be like, and it's going to be ending soon for China, if we're talking about a whole country being infected. So of course, that may bring people back into business and things may back to normal again. But the thing is this, you must understand that we all went through COVID before. It will take a while before we have a recovery. So in my opinion, this is too early to call for that. But nonetheless, right, investors are also weighing on the possibility that the Federal Reserve is going to slow down the pace of inflation fighting rate hikes. Okay. So now the thing is this, with the economic data released last week show a decline in wholesale prices and retail sales, that should probably continue to give Fed the reason why they could actually reduce rate hiking. But again and again, my point is this, we have a lot of governance coming out and says that they are favoring a quarter percentage point rate increase, which in my opinion itself is really not advisable. I think that 50 basis point makes more sense than doing 25, 25, 25, 25. It's better to knock it down and make everybody stop on this inflation. But again, Wall Street is bending on the chance of Federal Reserve doing that, and of course, the Federal Reserve are not able to really take the position of really going against Wall Street, right? So the market have priced in now 100% chance of a 25 basis point. Alright, this is definitely for sure. But the thing is this, we have a lot of earnings coming out this week, and the big names on deck round is Microsoft, IBM, Tesla, Visa, and MasterCard. If you ask me, right, if any of these technology companies come out and says that they will have so-called about what they call normal earnings, but their forecast for next quarter is not so good, that will bring the market down a little bit. So that is how I feel, and that's why yes, on Friday we saw the put option as being what they call cut away, because the boys want to really knock off all these guys and then bring the price higher, and when everybody thinks that it's time to buy, they sell it back to the retail. So of course, the main thing I'm watching now very closely is the US Treasury yields, and apparently for the 10-year yield is moving up. Alright, you can see on the chart right now, it's moving up. It hit the low end here itself, which I've been telling you guys to watch out for this. This is a very important technical point at about 3.3. Okay, once it hit 3.3, it's a good time to look for some potential buy up. And truth be told, now you have ended at 3.5. But the thing is this, 3.7 will be a most important level to watch. If the market do climb to 3.7, that will bring the equity market down a little bit. So traders, watch this very, very closely, alright? And of course, I've been telling you guys that if the rate is moving upwards based on historical pattern, whenever rate goes up, right, okay, it will always lead to a recession. Okay, can you see that now? Every time when the rate is going upwards, can you see that? Every time going upwards, eventually it will lead to a recession. Okay, sometimes it can be a bit later, but usually you can see from the screen right now, most of the time it comes quite fast. So with the rate now going up this way, it's kind of expected to see recession coming in. Okay, so the last 70 years is at 1 recession, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, now you can see most of the time the recession period to period is quite equivalent. It means that it's around about 4 to 5 years to 7 years with a recession, But the thing is this, we are now more than 10 years, okay, in this way, and then we have one should be right now. So if you ask me, right, by 2023 this year, we should see recession coming on board, okay? All right. Now, one thing that you must watch is the Japanese side, the BOJ, looking at on the yield, right? So the public debt is now more than double of its annual economic output. That means that the debt itself is twice the output, and that is very, very heavy burden for this industrial world, right? So Finance Minister Sunichi says that, right, okay, it's aimed to have annual budget surplus, and of course excluding the bond sales and the debt serving costs. So, but the thing is this, we all know that the government has just missed the budget balancing target for a decade already. So what I'm trying to say is simple, is that Japan tries to tell the whole world that they are okay, but we all know that these finances is increasingly precarious, and things can get really very bad. So the thing is that the government have been trying to press down the yield, okay? The yield hit a 0.5% recently. In fact, it blast past 0.5, but because I think they have been dumping a lot of these US bonds, and that pressure brought down and caused the yield to be off a little bit. But if the yield start to climb up again, all right, this is going to be bad, because do understand, the Minister of Finance estimated that every 1 percentage point rise in interest rate will boost debt service by 3.7 trillion yen, okay, for 2025-26, okay. So the thing is, this government was trying to stably manage Japanese JGB, so Japanese government bonds, insurance, through close communication with the market. But of course, end of the day, if this thing goes higher, then we may have to watch this closer, because from the screen right now, you can see that you went at a high of almost 0.6, then it came back all the way down, and that's why the stock market recovered. But now we can see very clearly that the yields are moving up again, and in my opinion, it's going to test the 0.5 as the US Federal Reserve is going to increase the interest rate by 0.25 minimum, and I still think that it should be a 0.5 for this coming February FOMC meeting. And of course, the more US rate hike, then this will likely push this yield to higher. And I think I'm going to tell you this itself, right? Michael Burry has been pretty spot on. Remember, back here itself in 2007, 2008, Michael Burry already said the market is really at a very peak level, and there will be a chance that you will pull back by at least 50%, and you can see that the market really pulled back 50%. In fact, the highest to the lowest point was more than 56% that year, that time itself. And of course, remember, after he said that, he says that after this thing has happened, we will, in 2021, we will actually see a very high inflation. And he was spot on again, as inflation shot up to 9.1%. So he was spot on again for the upside. And of course, back then he was saying that all these non-financial products itself, like Bitcoin and S&P 500, which is on the side, will be down. He says that most likely there'll be some selling, and he said that the white collar jobs bubble is going to burst. And what he said was spot on again. You can see a lot of companies like Amazon, Salesforce, Intel, Microsoft, Twitter, Cisco, all of them are laying off people. So once again, Michael Burry have been pretty spot on, right, for 2020 to 2021. So the thing is this, Michael Burry in January 2023, which is this month, on the 2nd, came out a very incredible big tweet, all right? And of course, this is what he said. Inflation peak, all right? So it's spot on again, because CPI data was 9.1 3 months ago, and now it's 6.5. But it's not going to be the last peak of this cycle. We are likely to see the CPI lower, which we saw, possibly negative in second half of 2023. Wow, that's something that I didn't expect. And the US in recession will by any definition. Okay, that means that he says that the US will enter recession by any definition, because we all know that White House has changed the definition of this recession, and that's why he's trying to say this. And he believes that the Federal Reserve will cut the interest rate once again, and government will stimulate and pump more money, and we will have another inflation spike. It's not hard. Now, I've said this before. If the thing is this, if the inflation is increasing, or where we are right now, and the Federal Reserve keep on increasing interest rate, so yes, indeed, it may temporarily halt people from doing business, and that will bring down inflation. But when that all happens as well, and the business economy has to crumble, US Federal Reserve will come back again and say, you know what, maybe it's time to cut interest rate to, smoothen the whole thing. Now, that will actually create the dollar value to go down, and that will increase inflation instead. And after that, inflation will spike again. This is no-brainer, and I totally agree with that. But the problem is this: the market decided that it's not important. Let's work on something right now. So you can see on the screen, there's a bit of PowerPoint issue. Once again, just give me a short moment to settle this. Okay, so what we know is that, right, the US inflation rate and the United States Fed fund rate goes tandem, right? You can see they move in tandem since all the way 1972 all the way to 1980, they were in tandem. But very interestingly, right now, you can see the Fed fund rate is moving upwards, but the inflation rate is going downwards. Alright, so the thing is this is something that's not usual if you compare to the past and history. So all I can say is that very, very soon, alright, you will see that the Fed fund rate going higher, and then this will go lower, which is a good thing, but then the stock market will be affected, and then when that all happens itself, right, Federal Reserve will come in to say something again. Because right now, right, you can see the Fed fund rate is trading at 4.25 to 4.5%. Alright, so all these information tell us that you just have to be a bit more careful as we go along. Because now the thing is this, okay, that was in the past. Now you can see right now the Fed fund rate is now down because of the current situation, but the inflation is shooting up, right? So that means that the Fed fund rate has to go higher to really come together with the current inflation rate itself. So more rate hike is coming in my opinion. And Charlie Munger is also warning this. Now, Charlie Munger is the sidekick of Warren Buffett. They've been together for many, many years. And this guy is a lawyer, so of course he knows what he's saying. And more important, he's going to express how he feels about the US inflation right now and what could happen or can happen if things doesn't go as planned. Let's hear him out.
If you try and print too much money, it eventually causes terrible trouble. And we're closer to terrible trouble than we've been in the past, but it may still be a long way off. I certainly hope so.
Alright, so you can hear him, right? Charlie Munger is saying this inflation is going to hit the town. And as long as we don't know how to contain this can get very bad. And of course, this will actually create another mayhem to the market. And we all know that, right, Warren Buffett and Charlie Munger is holding more than $80 billion of cash, not utilizing itself right now because they feel that the price is still expensive. They need to go down a bit more, and I totally agree with them. And I think that we should really take the advice of these guys who have been successful for the last 30, 40 years. All right. So the thing is this right now, Michael Burry believes that, right, there's a very high chance that the S&P 500 will really drop down to 2,000 level, because that is exactly the level back in year 2020 itself. But of course, I don't think so this will really happen in my opinion, but maybe 3,200 will be a very good level to begin with. But of course, let's see what others have said. Let's take a look. Now, of course, we have this Mrs. Michael Burry himself. He suggests that the S&P 500 could plunge another 48% to here itself, 2000, 2009. So that is from Michael Burry. Okay, let me just think one. The next one is come from Mike Wilson from Morgan Stanley. He believed that S&P 500 can go down to 3,000. Well, he's very near to my target, so I think that is possible. And of course, we have the where he come from Barclay. Barclay believed that the S&P 500 will come down to 3,200, the same level that I mentioned. Very good. And of course, the last one we have UBS also saying that S&P have to fall to about 3,200. So apparently this number become a common point, and we all know that when you have a common point, there's a chance of it happening, or if not, you skip down all the way to the next available support, which in this case, I just saw is about 3,000. Yeah, okay, let's just see that whatever can happen will happen, but the thing is this is a collection of people forecast for 2023. Okay, so let's just look at the chart right now and see what we have for today. So let's take a look now on the Dow Jones today. The market KFC level that we have is 33,000. 33,000. Wait a minute, there's some error here. Wait a minute. Yeah? Okay, hold on. Okay, 33,031. Sorry, my bad. Yeah, 33,117. That is the actual level. Okay, of the KFC. So we saw on this particular day, I think that will be on Friday, the US market came down, then recovered all the way, created a BNB. So as long as the market stays above here, 33,177, we can see it going up to 34,000. But if the market fail and pulls back instead, then of course the market should find this support 33117 as a first support. And for the Nasdaq right now, wow, incredible! The Nasdaq blast past the KFC level, which happened to be 11,774, and you can see that yesterday the market just blast right through and close above it. Now, of course, the thing is this: as long as the Nasdaq stays firm, we can see it going all the way to 12,100. But based on what I know right now, the thing is this: it's a probability that we can see it coming back down to KFC level to take a bit of a breather before we go to move into the next point. Because once again, you don't want the market to shoot up too much, and that will change the cost of everything, right? And it may get things worse. All right. So let's look at China market. It's closed for a holiday, so we will just wait for a while. And then, of course, let's look at the US market right now for today to give our validation. So first of all, the Dow Jones is very, very near to 33,827. In fact, the day high for today is 33,676. All right, not too far away. So KSI is red, but KRW is KSI is green, KRW is red. So they are mixed back at the moment. So that means the market most likely will not close at a high. Hence, therefore, now the thing is this: today the opening price is below pivot 2, and once the market opens and is below pivot 2 and trades below OP, usually there will be some selling. All right, I think I've already heard this before. So the first target for it will be at around 33516 for the Dow Jones. That's for 900 points from where we are right now, which happen to stack with the MA30. Now MA30 itself is, I think, if I not get it wrong, let me just try to take this away. Okay, can't take this away. Never mind. Let's take a look at this object list. Here we go. So the MA30 is at this 33,527. Well, the MLP is 33,516. So it's very, very near. So the market, right, usually have tendency to pull towards a stack. So traders take note of that. The Dow Jones may go towards this point. Now, once it finds strength on this area, it may stage a recovery back to pivot 12 again. All right, so watch out for this. Now, Nasdaq have a very strong CCRY pattern, and based on what we're seeing right now, it's very close to the 11,983 technical level, which usually the market will take some profit. But I think for safety sake itself, right now, the Nasdaq have plummeted past the both MA200 and MLP, and also cross pivot 2. So if the market can recover, it may go all the way to this KCB point at 12004. But of course, if we fail, then of course we have some support right here right now, and that's about approximately pivot 2 level, and that is about 11804. Okay, so traders, watch out. All this is very important information. And S&P 500 has rocketed yesterday to touch the 4020 mark, which obviously itself is a something that we don't really do, because why? Probably the market knows that, okay, the first round it price goes up, it missed by a fraction, it pulls back, but it's different now. The thing is this: a new office is involved, and as you try again, KSI is green and the KRW is cyan, it can push towards the next target level, which you can see one push, you went all the way up. All right, still about almost 1,100 points, something that you don't see from the local scene here. So the thing is this: right now with 4020 as the main resistance right now, I think that it has to stay here. If it goes down, then 3997 will be the MLP, which is like kind of like boring, if you actually ask me. So we'll see how it goes and we will dictate later. Now for currency, right, a lot of people like my currency sharing. So for currency right now, pound is staging a doji formation, which means that if anything happens to the dollar, right, the euro can come back down once again. This is something that you don't want to go through. And the level here is not so bad. This one is about the 1.0760 level. Okay. Okay, I think there's some error on my side, on the forex side. I'm going to skip this. Okay, so let's just look at the other market right now. Let's say we look at DAX. Okay, that means what DAX is also missing on my screen. Just give me a moment, because it's something that I done earlier, I think. Okay. All right, DAX now is trading between pivot 1 and pivot 2, and MLP is 15116. Hence, therefore, if the market now is trading below MLP, below OP, then the first support will be somewhere around here, and that will be 15,072. So if the market breaks below that, then there is a chance for you to see this number here, 14,888. Alright, so something to watch out for. KSI is red, but the KRW is cyan, so again a lot of mix between them. So if you ask me, then maybe what we can do is that we can actually watch the market for a while and observe and see what will happen next. Alright. Okay, so that is the DAX. Let's look at the gold and silver market right now to understand this better. Okay, so what we are seeing right now, the gold has been climbing up ferociously since here when it was trading at about 170.86 and now it's trading at 1939. Alright, more than $158 of run here itself, and I've been telling people this, gold is a buy on the second round, which you can see that KSI was red, cyan here, so that's why the price goes up so nicely. Alright, so now what's happening right now is that gold price has went up this morning and seemingly going to touch the 1955 level. The high was 1942. So the thing here now, there's a lot of technical point, 1932, 1926 and 1816, but the one that I'm watching very closely is 1828 because I want it to come down to and come down so that the gold price can come down a little bit more. You can come down to 1867 will be good, and that will give people more chance to buy some gold. Because for me, it's alright, gold has a commodity, and the thing is that if you look carefully, we have not really completed thing yet. We need to finish out thing, then we can actually talk about how high can gold go. But the thing is in my opinion, gold can go up the way to 2218, and that's my this year target. Yeah. Alright, so that is gold, and that's silver. Now silver is still moving downwards slowly but steadily. Now it's a new BNB yesterday, so 2556 extension, 2135 the next extension. KSI is red, but KRW is cyan. So that means that the KSI will come in to tell the market that there will be more selling, but the KRW is saying that they're buying interest. So you see, whenever silver comes down long enough, you can see the buying interest come back in again. Alright, so this is something that to watch out for. So hopefully you all don't miss it. And of course, Bitcoin, like I say, this is the one wonder that I really got it wrong. I expect the Bitcoin to come down to 21,000 to 19,000, but apparently it's still holding on. And KSI and no KCX basically take up the main reason why the market is holding up. Okay, so to me, there's a Bitcoin today. The target is 23,400, but the downside itself is 22,147, pretty nearby. So you see which is better for you. You can try it out. Alright, so this is something to watch out for Bitcoin. Honestly, I'm still looking at Bitcoin to come down. If it ever can come down, my target is 18,000 first, then after that by 12,000. Okay, alright, that'll be all for today. Thank you once again. I'll see you tomorrow. This is Cal signing off. Bye bye.